Well, welcome, everyone. We've got on the line today on the Zoom call Richard Ift, myself, Sherry Roulette, and Annette Burris, all of the Federal Insurance Office at Treasury. Also with us today are Mike McCauley at ISO, who is directing the collection and aggregation of the data that's reported through the portal operated by ISO. Also on the line is Aaron Brandenburg of the NAIC, which is coordinating the effort from the standpoint of the state insurance regulators. As we proceed through the webinar, and we're going to basically be running through the small insurer form and pointing out some things about it. To the extent you have any questions, what you can do is send them through the chat function directed to Sherry Roulette or Annette Burris, or you can send it to me too, but I probably won't be looking at them much while I'm doing this. But anyway, if you send them directly to us, they won't be sort of visible to everybody else on the call. Unless you want them to be visible to everybody in the call, then please feel free. But send them directly to us if you want to remain anonymous, and we will. If we don't respond to them as they come in, we will certainly respond to them at the end of the prepared remarks. We will also have a recording of the webinar once it's completed, posted on our website, and you should all have gotten the message this is now being recorded. We will post that on our website at the same place that you found the links to join the webinar. So hopefully by next week, once the webinars get processed and we can get them put up, so you'll be able to find those there in case anything you wanted to listen to again, or direct a colleague to it who couldn't attend or what have you. So, okay, just to get started, as I'm sure all of you know, this data call is required under Section 104H1, the Terrorism Risk Insurance Act. It is designed to provide Treasury with a data set that it will use to periodically analyze, among other things, the effectiveness of the program and the competitiveness of small insurers in the terrorism risk insurance marketplace. State regulators collect similar information for regulatory purposes with respect to insurers under their supervision. As has been the case in the past, Treasury and state regulators are coordinating in this effort with a consolidated approach that will allow reporting insurers to provide the same data set to Treasury through the portal operated by ISO, and to state regulators through a separate portal operated by New York State. Insurers will thereby satisfy their obligations to both entities by submitting the same data to two different locations. And while this may come up a little later on as well, so just be sure once you're done, you need to send one set of the forms back to ISO and then a separate set of the forms to the New York portal to satisfy your state reporting requirements. And at least in the past, there may be some, while the submissions are identical, you may need to sort of do some different naming conventions between the two portals. So you may need to actually rename the files to satisfy the administrative issues on the two separate ends. But other than that, the forms that's completed are the same. As I think you also know, the regulatory due date for the annual data call is May 15th. This date was set in light of FIO's statutory obligation to provide a report to Congress by June 30th, which this year actually does focus upon the role of small insurers in the terrorism risk insurance marketplace. If you would actually like to provide comments on the subject of that study, we published a Federal Register notice on March 28th, which seeks comments by May 12th and identifies various areas of interest in connection with the study. The notice is available on our website, where the information concerning the data call is also located, which we're about to go through and you should be seeing on your screen at the moment. Treasury is conducting training webinars for each of the 4 reporting templates, which are for small insurers, non-small insurers, alien surplus lines insurers, and captive insurers. This webinar will address small insurers. This year, small insurers include all insurance groups or insurance companies not part of a group that write TRIP-eligible lines of insurance, which had a calendar year 2021 direct earned premium of less than $1 billion in TRIP-eligible lines premium, and a policyholder surplus of less than $1 billion as well. Again, these values are calculated on a group basis for all insurers in the group who are writing in the TRIP-eligible lines. This threshold will now remain at that less than $1 billion figure through the program's current expiration date in 2027. Please keep in mind that if you are an insurer or a group that is under the policy surplus limit, but near the cutoff for premium purposes, certain premium allocated to lines for state reporting purposes is not included in TRIP and would be excluded from your calculation of TRIP-eligible DEP. This would include personal lines premium in lines such as fire and allied lines, as well as professional liability insurance, which is reported within other liability, which, although that is a TRIP-eligible line, there is an exclusion in the statute for professional liability insurance. So you would need to carve that out of the premium that you otherwise report in the other liability fields. The form instructions contain a comprehensive list of premium categories to be excluded, so please evaluate this before concluding whether you should report on the small insurer form or the non-small insurer form, given that the non-small form does require more information to be reported. The webinar for non-small insurers was held earlier today and will be posted on the TRIP data call website in the near future in case it is relevant to you and you missed it. We will also be holding two webinars tomorrow, one at 11 a.m. Eastern Time for alien surplus lines insurers, and a second at 3 p.m. Eastern Time for captive insurers. I also want to mention that once you determine that you qualify as a small insurer, there is a reporting exemption for any small insurer that wrote less than $10 million in TRIP-eligible lines direct earned premium in 2022. This is TRIP-eligible lines premium as defined by TRIP and would again be excluding premium from areas such as personal lines, professional liability, and the issues that I just addressed. If you are below this threshold, you don't need to register a report. However, if you do fall into this category, it might be helpful if you could notify Treasury and ISO, particularly if you're near the break point, that you are not reporting on this basis. Otherwise, we may think you forgot about us and contact you at a later point if we think you should have reported and did not. Also, even keep in mind, even if you are only slightly above the $10 million premium threshold, you will still be required to report. We don't have an exception for somebody who's really close to $10 million and under $10 million in TRIP eligible lines premium. There are no other reporting exemptions or exceptions other than this $10 million figure. As I mentioned, TRIP operates on a group basis, and so reporting is also done on a group basis. You would only report as an individual company if you are not affiliated with another company writing TRIP eligible lines business. In addition, remember that any alien surplus lines insurers that are part of a group should report with that group. The alien surplus lines insurer template should only be used by alien surplus lines insurers that are not affiliated with a non-small or small insurer group. There have been no substantive changes to this year's data call for small insurers. For those of you writing cyber insurers, there has been a change which provides more options to report information concerning number of policies and premium by size of policyholder, which should make the reporting easier. I will address those later in the webinar when we get to the cyber worksheet. Otherwise, if you have been responsible for your organization's reporting in the past, you should find the process pretty straightforward. The process to start the data call is pretty simple. You will go to the data collection website, and there's a link to it here on our page, but Barry's already transmitted to it. Once you hit the link, you will see this TRIP Section 111 data call page. At that point, you will download the registration form, which you'll see at the bottom. You will then, and we won't go through that process at this point, but just go ahead and get a copy of that form. You will then fill out this registration form and email it to the address provided. The point of contact you list on your registration form will receive an email from ISO and a link to a secure portal once your forms are ready. And that the portal then contains your required reporting form. We do get quite a few questions from insurers saying they haven't received the reporting templates yet. So please remember that each year your organization will need to fill out this registration form and email it over to ISO. You won't be getting a form until you let us know you're registering for the data call this year. Once you have collected your data and completed the reporting form, you will send it back to ISO through the same secure portal. The form will be provided to you in live Excel format. However, if you prefer to report using a CSV form, just notify ISO of that and they will provide you with specifications to submit your data in CSV format instead. Again, remember that although this is a consolidated data call, you need to separately submit your completed reporting form to the New York portal for state reporting purposes. Submitting your form to ISO will only fulfill your obligations under the Treasury data call, and submitting your data only to the New York portal will not satisfy your Treasury reporting obligations. And before we actually get more in detail in the forms themselves, Mike and then Aaron, if you could each maybe say a few words about where you guys are in the data call at this point.
Yeah, sure, Richard. Thank you. Yeah, just a quick status update as it relates to small insurers. For all small insurers who submitted their registrations prior to today, they should have received a secure email response from us at Verisk containing their SFTP account credentials in order to access the data reporting templates. If for some reason you have not received that email or have experienced any technical difficulties, please feel free to let me know. Richard has provided some contact information here. Sherry has also shared my email address in the chat function as well. So that's my status update at this point, Richard. Thank you.
Aaron, anything on the state data call at this point?
Yeah, thanks, Richard. I think you covered it pretty well, but we have done a consolidated data call between the states and Treasury since 2018, asking for the same data set as Richard described, with one transmission going to Treasury via their file transfer and the other going through the state of New York portal. We sent out an email to all companies. You can also find additional information on the NEIC's Terrorism Risk Insurance Data Call website, where we have instructions on the portal how to submit the file to states through the New York portal. There's also a email address, triahelp@neic.org, if you have additional questions. And we would just reiterate that, if you have a refiling, please submit that to both locations. Don't forget to submit both files. That's all I have. Thank you.
Yeah, that good point, Aaron. I mean, it doesn't happen often, but there will be situations in which certainly, ISO may reach out to you about submissions that, we've identified problems or issues and, and maybe seeking corrections. If that very limited situation does occur, please make sure to, correct your submissions both on the federal and the state end. So, okay. Again, as was the case last year, if you write workers' compensation insurance, most of the information for the workers' compensation fields on your form will be submitted on your behalf by NCCI, the California Workers' Compensation Insurance Rating Board, and the New York Compensation Insurance Rating Board. NCCI also coordinates with rating bureaus in the states in which where it does not operate. So we will get comprehensive nationwide information through their efforts. And although workers' compensation writers, and this is really, I'm directing this mostly to monoline writers, that's all they write, they're not required to submit certain data elements. Please remember those companies still need to register because NCCI and the rating bureaus will not register on your behalf, nor will they or can they report questions or respond to questions on workers' compensation reinsurance, which you'll find on the reinsurance worksite. And again, if you write excess workers' compensation, they don't have that information either. So even a workers' compensation monoline insurer still needs to register for the data call, and there are some aspects of the form they do need to complete. Let's see. That's hopefully everybody understands that. Again, as we mentioned earlier, if you have any questions as you start putting your data submission together and complete the reporting forms, your first action should be to review the instructions for the small insurer form that you will be completing. The instructions are also available on Treasury's website. Sherry has brought those up. This is what they look like. And basically what those do, is they go through literally line by line the forms, and go ahead and scroll down and to when it sort of starts. I mean, there's some general stuff at the beginning, some summary of changes, but literally each set of cells, it will tell you what we're looking for there. So most of the information you should need, you should be able to find in the instruction forms. So anyway, going back to the website page, Jerry. There's also a document located there at right under the links to the forms. There's the comprehensive. Actually, that's the comprehensive zip code level. That's really for categories of insurers other than small insurers, because that's used in responding to the geographic exposures worksheet, which we do not require small insurers to respond to. So you probably will not need to make reference to that. However, the one right under that, the selection of sample fact patterns, provides examples of how to report various data elements, particularly those that may not be immediately intuitive. As if you do pull that up and take a look at it, just keep in mind the examples in this summary were prepared using a non-small insurer as an example. So if you look at the examples, you may see some requested data elements which don't look precisely the same as they do on the small insurer form, but the principles, the reporting principles illustrated in each example will be the same, because it's really talking about timing issues and that sort of. If you still have any questions after reviewing the instructions, you can obtain help in response to a specific question by emailing trip section 111data@iso.com. In response to this email, you'll get either a written email response, a call from ISO, or a call from Treasury. Alternatively, you can directly call ISO or Treasury to ask your question and or send emails. And I guess we provided the email addresses in the chat. I think phone numbers actually may show up in our Federal Register notice. But anyway, shoot us an email. We're pretty good about, if you do have a specific question, we're usually pretty good and pretty quick about getting back to folks with some guidance. Okay, I think now it's probably time to start going through each of the individual worksheets. So we've now brought up the small insurer worksheet, and I'll provide at least some further information about what Treasury is seeking and maybe some suggestions for completing the worksheet. Again, if you have any questions that come up, just put them in the chat box directed to Sherry or myself or Annette, and that'll make it anonymous to everybody else, and we'll either address them as we go along or we'll do them at the end. So anyway, again, when you get the forms, as I said, you'll get live Excel forms, and that ISO sends those to control what people get. On our website, you know, we don't have Excel forms up. We just have PDF copies, and those are actually a little easier to work with in this kind of setting. So, you know, you're looking at a PDF version of the reporting template right now, but you are, I'm sure you're aware, what you will see a real Excel spreadsheet, which may look a tiny bit different once you get the reporting forms. Okay, the first form displayed here, worksheet, is for insurer group affiliations. The purpose of this worksheet is to identify which entities you are reporting for. Again, reporting is done on a group basis unless obviously you're a single company, and all insurers will need to complete this worksheet even if the only type of coverage they write is workers' compensation. We use NAIC codes, group and company, for tracking purposes. You'll see that in column B. Alien surplus lines insurers, that if you happen to have an alien surplus lines insurers within your small insurer group, they should use the number assigned by the International Insurers Department of the NAIC. If you are an insurer that doesn't have such a number for whatever reason, ISO will assign you a number for tracking purposes. If you have reported before, please just go ahead and use the same company identification number that has been assigned to you in prior years. Moving up to the two fields on the right, you will need to report your group's total 2021, not 2022. We're looking here for 2021 information, policyholder surplus. That's line 3 there, columns G and H. Using the same number that you report for state statutory reporting purposes. You also need to report here, again, column G, line 4, your 2021 trip eligible lines premium, as this is the number used to calculate your 2022 program deductible, which of course is largely what we're otherwise focusing on in this data call. And you will need to use that figure when responding to questions on the reinsurance worksheet. If you reported a figure last year that you now believe to be an error based upon further evaluation, then enter the revised number this year. We have actually added some clarifications in the instructions for this field for insurers that did not have any trip eligible lines DEP in 2021, as some insurers in this situation have simply reported a zero deductible or zero premium, which then translates into a zero deductible. For such insurers, the program rules specify that an estimate is to be made based upon current or 2022 trip eligible DEP. The new instructions here specify that if you are in this unusual situation, for example, you just started writing trip eligible lines in 2021 or in 2022 and hence didn't have any in 2021, or you're actually a new company, obviously you would be in that situation. So please read the rules for that. Otherwise, if you've been doing this for a while, there's no changes. Moving on, and again on the next worksheet, which is the direct earned premium worksheet. Here you will be recording your direct earned premium by relevant NAIC line or subline. Remember that when reporting your premium, although TRIP is defined in most part with reference to the NAIC state reporting lines, there are some significant differences. Principally, NAIC lines 1 and 2.1 for fire and allied lines, and that's for fire and allied lines, include both commercial and personal lines coverage, but only the commercial portion of this coverage falls within TRIP, and you should exclude any personal lines premium when reporting. Similarly, professional liability and errors and omissions coverage are excluded from TRIP. Those would otherwise be reported on for state reporting purposes on line 17. Here you'll see other liability is in line 14 of this worksheet. You'll want to take that information out because that premium is not subject to TRIP. The instructions do highlight or identify the differences between TRIP lines and NAIC state reporting lines, so you can ensure you are accurately reporting your TRIP eligible premium. Please also remember that, as I indicated before, if you do write workers' compensation, these figures will be provided separately by NCCI, California WCIRB, and the New York Bureau, so you do not need to fill in those fields. You do still need to complete the fields for excess workers' compensation, line 13 of the form, NAIC line 17.3. Again, the rating bureaus do not capture that information, so they're unable to report that. Column D, your total TRIP eligible lines premium will auto-populate, and the formulas in the cells you receive will sum columns E, F, and G, and the figures, the combined figures you enter in there will add up to what then appears in column D. If you provide a number in column H where terrorism risk insurance is provided for a certain amount of disclosed premium, then column H should contain the actual amount that was charged for terrorism risk premium, and thus column H will be a subset of column G, which shows the policy's total overall premium.
Richard, we have a question.
Yeah. Okay.
The question is, would we report NYFTZ included?
I'm sorry, NYFTZ?
Yeah, it's a message to everyone if you want to see it. If you want to pull your chat up.
I'm not sure. I do see it. New York Free. Oh yeah, I think we respond. Yeah, there's no exception for New York Free Trade Zone premium stuff. So yeah, I mean that would be reported. I mean, if the lines of insurance you're writing within that, otherwise, are defined, would be, a fire policy or, ocean marine, inland marine, what have you. Yeah, that would be reported just like anything else. So, okay, premium should be entered on a direct earned basis for calendar year 2022. This means, of course, that if you have a policy that started before 2022 or ended after 2022, you should only include the premium earned in 2022 for that policy. If the policy covers multiple states, the premium should be allocated to each state proportionally in the same manner that you report for state reporting purposes. And that's really the only issues on that particular sheet. Going down to the next page, Sherry, is the standalone terrorism worksheet. On this template, you will provide information about any standalone policies that you issue which cover only terrorism. Again, this is going to cover policies that offer coverage only for terrorism risks. Policies that cover risks in addition to terrorism would be included on the previous page for reporting direct earned premium. Again, though, if you do issue any policies that are standalone terrorism policies, you would need to include those policies in appropriate reporting lines in the prior sheet as well. So if you did write any standalone terrorism policies, and our reporting tends to show that most small insurers do not. But if you do, you would report that information in here. It's a nationwide form. It's pretty straightforward. I think it's self-explanatory. If you do, and that premium should also appear in the appropriate lines in the prior worksheet as well. If you don't, then you don't have anything to do on this one. You will see in here for comparative purposes, we do ask you to provide information that provide on policies that provide coverage for acts of terrorism certified under TRIA, and that's line 4. Although in line 5, you know, again, for comparative purposes, we ask you to disclose if you've got policies for so-called non-certified acts of terrorism that would respond whether or not TRIA was involved. Again, data is reported on a nationwide basis, and there are fields in here for the number of policies you issued, as well as exposure information on exposure and limits of liability. Okay, the next sheet is the cyber worksheet, and can we straighten that? Yeah, go over it. Yeah, there we go. Okay. Although there were a number of expanded areas of inquiry introduced for the first time in the 2022 data call, categories have not changed for this year, except in connection with the liberalization of certain reporting requirements. And I'll highlight those when we get to them. As in prior years, you'll see we are continuing to seek information on both standalone cyber policies, you'll see that column C, as well as cyber endorsements attached to another policy, that would be column D. That's the same way in which the NAIC seeks information on cyber policies. We're obviously looking for you to respond similarly to the way you would respond to the NAIC data calls on cyber in terms of dividing it between standalone and package. You should not provide any information on this template on non-affirmative or so-called silent cyber coverage, where a policy may cover some sort of cyber loss because cyber is not specifically excluded in the policy. Lines 3 through 6, 8 through 9, and 18 to 19 of this form request information concerning premiums, number of policies, and limits for cyber policies in TRIP eligible lines of insurance. This is basically the same issue that we've been requesting on cyber since we began collecting cyber information, I think in 2018. So you should continue to respond to these questions as you have in the past. And I think the categories are pretty straightforward, again, as divided between standalone and package. Line 7, 10, and 20 basically request the same information concerning premium, number of policies, and limits, but is applied to cyber policies written in non-TRIP eligible lines of insurance. While the information is the same as the sort of information we have requested in the past, we have expanded it. We expanded it last year to policies written in non-TRIP eligible lines, so that we're able to assess the amount of cyber insurance that is currently not subject to the program. Our understanding is that this will largely be cyber insurance that is currently being coded, characterized, and otherwise reported for state purposes as professional liability insurance, which, as I mentioned earlier, is subject to an exclusion under TRIA. These questions, assuming you write policies that you believe fall into this category, should be answered in the same way as you respond to the questions for policies written in the TRIP eligible line. Now, last year, for the first time, and it sort of starts appearing at line 12 of the worksheet, we began requesting certain categories of information which we had not previously requested. Those involve, and then lines 12 to 17, premium and number of policies allocated by size of policyholder, which last year we measured solely by the number of employees of the policyholder. Lines 21 to 24, and that carries over to the next page. If you want to scroll down a little bit, Sherry. Yeah, 21 to 24, the limits that are specific to cyber extortion and ransom payments. And last but not least, lines 25 to 30, we're looking there for loss information specific to cyber extortion and ransom payments. If you participated in the 2022 data call, you may recall that we provided certain special instructions concerning these new categories, which in some cases reflected that we would be taking a liberal approach on the collection for insurers, particularly for insurers that may not have previously collected certain of these elements as part of their underwriting process. Given that we are now in the second year of this collection, that special instruction has been deleted, and we do expect complete reporting in all the categories by any insurers that are writing cyber insurance. So please report all of those fields. And obviously, if you do have any questions about the reporting, please feel free to reach out to us. But I do want to stress, we are expecting complete reporting this year. We did get a fair number of folks last year that simply decided they weren't going to do it, and that's not an option this year. For one of these categories, however, that's premium and number of policies allocated by size of policyholder. Again, that's, Sherry, if you can move up again, that's lines 12 to 17. Lines 12 to 17. We have provided some further options for reporting. No new requirements, but hopefully some ways to make it easier. Again, last year, the reporting required the allocation to be made based on the number of employees of the policyholder in certain identified ranges for small, medium, and large policyholders. This year, based upon some comments we received in some outreach, we are also allowing insurers to use revenue categories, which are also specified here. And as you'll see, like lines 12, a small insurer is now either an insurer with 100 or fewer employees or less than 10 million in revenue. Same medium, 101 to 500 employees or 10 to 100 million in revenue. And lastly, large policyholders, 501 or more employees or more than 100 million in revenue. So hopefully, if you didn't capture number of employees of your policyholder, certainly you would presumably have what their annual revenue was. So we are fine with reporting it either way. Note, however, that this is an either or election. You've got to pick one method or the other that you're going to use for this. We're going to track it, so we just to make sure that we're not getting vastly crazily different results by people that use one measure versus the other measure. So you can't use one measure for some policyholders and the other measure for other policyholders. And Mike, could you just address briefly to the group how we're going to be tracking this?
Yes, Richard. Yeah, so in order to reduce the burden on insurers and in order to properly identify the manner in which you are reporting, whether that be by employees or revenue, we have provided instructions for the cyber file naming convention, which will capture this information. So as part of the response email to your registration, there's instructions in there as to how to appropriately name the cyber worksheet in order to identify whether you are reporting based on employee number or revenue. And to provide additional details as need be, but that's kind of the gist of it.
Okay. We've also added this year certain clarifications in the instructions, which specify what fields should total up for reconciliation purposes. There aren't any changes here in terms of what we've been doing, and the last year, most of the figures of most of the insurers, total up correctly, but we wanted to make sure that everybody knew what we expected should be reconciling. And so, for example, go up to the instructions for lines C12 to E12. Yep. So you'll see last sentence in the comments, the sums of E12, E12, E13, and E14 must show the value entered in E11. So and actually probably might be a mistake. That's probably E12. Well, we'll take a look at that, and if we need to fix it. But if you oh no, that is right. It's because there's a little bit of a disconnect in the two things. So yes, this will tell you what things should be adding up, and just sort of enter into the fields, and just as a guide to what numbers should be adding up. If they're adding up the way the numbers specified in the instructions, you should be okay. No changes this year to the questions concerning limits that are specific to cyber extortion and ransom payments. As explained last year, the distinction that we are drawing here is between coverage for cyber extortion generally, which we understand, could contain many policy benefits apart from payment or reimbursement of an actual ransom payment, versus limits for the actual ransom payment itself. To the extent there is no distinction here, i.e. your policy basically has one limit that applies for cyber extortion generally and for a ransomware payment, then please report the same limit. What we're trying to get at here is if there is a different limit for cyber extortion generally versus what might be payable for the actual ransom payment. Again, we do request this information separately as between policies in TRIP versus non-TRIP eligible lines. Finally, the last category in the last series of questions on the form, the loss information. Again, we are asking this specific to cyber extortion and ransom payments, whether in TRIP eligible lines or not. So we're not requesting you to break that out here. Questions seek paid and incurred amounts for cyber extortion generally, and paid amounts for ransom payments, along with the number of claims such ransom payments are associated with. Finally, direct defense amounts for cyber extortion generally, again, without any effort to segregate that to ransom payments specifically, are sought, and again, on a paid and incurred basis. Again, if you have any further questions on this, we can respond either through the chat function, and obviously if you have anything you wanted to address with us directly, we can do that. Okay, let's go to the next worksheet, Sherry, exposure bases. And you'll need to shrink that down. A little more. Oh. There we go. Next, you will report your exposures on a jurisdictional basis. As with reporting DEP, you will provide data based on NAIC reporting lines as specified in column C, and identify exposures where terrorism coverage was provided or not. The purpose here is to calculate the total potential exposure under the policy. In other words, the most that you might have to pay under the policy in question, at least on a single occurrence basis. So I mean, we do ask you to use a single occurrence as the basis. If there's a separate aggregate, while there are places that may go in, as I'll highlight, that's what we're looking for here. The worksheet also asks you to specifically identify policy limits where nuclear, biological, chemical, radiological, or NBCR risks are not excluded. This is requested for both property and liability exposures. So you'll see in column D, you'll be providing limits of the property insurance where terrorism risk insurance is provided. Then in column E, next to it, you will look at the same universe of policies and report policy limits for only those policies where NBCR coverage is not completely excluded from the policy. If there are NBCR sublimits in place, these should be reflected accordingly in the exposure reported in column E. So column E should be a subset of the figure in column D. The same reporting method will be used in columns I and J, to report limits of liability. And also to clarify, if a policy provides terrorism risk coverage for any type of NBCR exposure, even if others are excluded, then this policy exposure should be included as not excluding NBCR coverage. So in other words, if a policy explicitly excludes nuclear risk, but would cover chemical or radiological risk, then you should be recording the policy information in columns E and J, respectively. In addition, though, if a policy only provides NBCR coverage as a result of fire or following laws, which are in place in certain states, you should not be include that in your calculation. A fire following state, and I think there's about 15 or 16, would be one that has standard fire policies that basically require the policy to cover all risk associated with fire, no matter even if they result otherwise from a named exclusion. So in other words, if a nuclear attack caused a massive fire, those fire losses would be covered under such a policy, even if it otherwise purports to exclude it. We're looking for you to respond to the questions in columns E and J based upon basically the terms and conditions of your policy. We're obviously in a position otherwise to assess any legal issues that might arise otherwise. We are also requesting information on policyholder deductibles or self-insured retentions, which is the same as we have done in previous years. And I see, hold on, we have a question. Good question, Lara, and I'll get to that. When you put in the retention or deductible information for policies on this sheet, you should only be doing it on primary or first level policies where there's no, underlying primary policy. Basically, if what we're hoping, of course, everybody reports, every primary insurer reports the premium and deductible or SIR information for their policyholder. To the extent there's a tower sitting above that, if every insurer in that tower basically reported the same information, or for that matter, reported the underlying limits that needed to be exhausted before getting to that coverage, we get a massive amount of double counting that isn't what we're looking for here. So if you're a primary insurer, you report that information. If you're an excess insurer, well, it might seem counterintuitive to you. If there's underlying coverage that should be reporting that information, you should just be reporting zeros in there, because in terms of trying to make the numbers add up, in terms of what's going on economically, we wouldn't want to hear about the same deductible from multiple insurers. So, thank you. That is something that we want you to sort of be aware of. If a policy contains multiple deductibles or self-insured retentions within a state, depending on the property, location, or type of operation, please use the lowest deductible or self-insured retention within that state. You would use the same logic when filling out the exposure worksheet for the United States as a whole, and use the overall lowest deductible or self-insured retention for the policy. I also wanted to review some of the differences in how exposure information should be reported as compared to premium. First of all, you want to report your exposure information on a per occurrence basis, which I mentioned before. Next, whereas you would divide premium information proportionally by jurisdiction, with exposure, you would report the relevant limit for each jurisdiction, even if an aggregate cap might cap your exposure across multiple jurisdictions. So for example, if you had one policy providing 1 million of coverage in 2 states, let's say California and Oregon, you would report 1 million of exposure on each of the California and Oregon worksheets, even though the policy had a single overall limit of 1 million. For this one, you also need to fill out a US worksheet, which aggregates all of your policies together. So in this example, on the US worksheet, you would provide the overall policy limit and take into account any limits that might apply across multiple jurisdictions. So in the example I just gave, 1 million would be the overall US exposure because it is a single policy providing $1 million in coverage. Also, as a reminder, if it has a single occurrence limit, use the single occurrence limit. If there is no single occurrence limit, obviously use the policy's aggregate limit. Another difference between the DEP worksheet and this exposure spreadsheet is that you should be calculating exposure based on policies that were in force on December 31, 2020. This differs from the premium worksheet, which asks you to basically include premium on an earned basis in 2022, even if a policy expired before December 31. So, and while we appreciate this, there's going to be a slight disconnect here, but in terms of sort of doing our calculations, we thought this was the best year to get a like data set year over year. So again, on the exposure worksheet only, if a policy terminated before December 31, 2020, you shouldn't be including that policy in your calculations for this worksheet, even though it will factor into the premium worksheet. Once again, the rating bureaus will provide payroll information for workers' compensation, but you will still need to provide payroll information for any excess workers' compensation, again, because the rating bureaus do not have that information. Let's go to the next sheet, Sherry. This is the places of worship worksheet. Can we, yeah, let's move that over, or, yeah, there we go. This form collects data on the availability and affordability of terrorism risk insurance for places of worship. This year's worksheet remains the same, and it requests that data be reported on a nationwide basis, and it's categorized by property, liability, and workers' compensation policies. We only want information on policies written for places of worship. When you are reporting this data, do your best to only report coverage related to actual houses of worship and exclude any affiliated religious institutions such as hospitals or schools. You'll see that we have asked you to report this information under a specific industry code. We are aware that different insurers use different systems for classifying their policyholders. So we provide you with the option to report your data using one of the following. We've got NAICS codes, SIC codes, or ISO class codes. If you can report your information using one of these classification systems, please do so. And again, you only need to do one. Don't do it for all three. Just pick one and use that. If you can't use any of these methodologies, but you have another way to extract this data, such as a policyholder name search, please do that instead. There's no category on this for unavailable or unknown. We are specifically seeking data on places of worship, which is in response to a direct congressional request. So we do ask that you find a way to report actual or estimated information for your policyholders within this sector. As with many, and again, the codes that are identified there are our best identification of the code, which is applicable to the actual place of worship location. So if you can classify them by those codes, that's a safe harbor. You just use that and we'll be fine. If not, do your best to fill it in the other category based upon your own individual evaluation. As with many of the other spreadsheets, you'll see on the workers' compensation fields on the right, these can be reported by NCCI, California WCIRB, and the New York Bureau. So again, you do not, you're not required to complete those fields on this form. Last but not least, going to the last worksheet, which is the reinsurance worksheet. You will need to answer these questions for your private third-party reinsurance protection. You should not include any intra-company arrangements or intra-group arrangements that you may have in place. While we appreciate that may be of great relevance for certain state reporting issues you may have, it's not what we're looking at Treasury. So we really just need you to, we're really looking to third-party treaty protection. And again, we're looking for treaty reinsurance protection. We're not asking you to do some complicated calculation on some sort of facultative basis. We're looking for, we understand that may vary from risk to risk in certain situations, but we're asking you for treaty reinsurance applicable to your terrorism risk. We strongly recommend that if you have an individual responsible for reinsurance in your company, and surely you do, you should forward this worksheet to them for completion. This will help ensure the accuracy of the data we receive. In addition, when responding to this worksheet, we need you to enter actual figures in column C, the response column. We understand that in a complex reinsurance program, it may be difficult to provide a single answer, but if a response is provided as, C description and C explanation description, or C attached, sometimes we get literally a worksheet of what the reinsurance protection is in place in a particular year. We appreciate the thoroughness, but in terms of our ability to aggregate and analyze the information, we really need you to put your best information or most likely figure in column C, even if understanding in any particular circumstances may vary from claim to claim. So just do your best to put in a real number in column C. If you feel you need to explain that, given that there are variables, that's the place to put that is in column D under description or explanation, but otherwise do your best to put a number in C. Again, if you have any questions about the completion of the worksheet, please feel free to direct them to Treasury or ISO as we discussed above. And also, please remember that all insurers need to, even if you're a workers' comp monoline insurance, the rating bureaus do not have any information concerning what reinsurance you may purchase. So obviously, they will not be in a position to report that. So we need you to fill out those forms. One I would like to highlight, we do get questions sometimes that we do ask questions for your natural catastrophe reinsurance purchases. I think those are in lines 8, 9, and 10. We do this, obviously, this is not a natural catastrophe program. We do occasionally receive questions about the relevance, but we're doing it for comparative purposes in terms of what reinsurance is available for terrorism risk versus Nat Cat. That's an important figure for us, particularly in a market that's moving, as I understand the reinsurance market is at the moment. So, please provide us that information so we can get a good feel on what the differentials might be there. You will also see that there is a question about any additional terrorism exclusions that apply to your reinsurance contracts, separate and apart from the domestic and foreign exclusions listed in rows 12 to 13. The question appears in row 26. This is meant to capture situations where you may have an exclusion in your treaty for risk at particular locations or within particular metropolitan areas. The other thing I wanted to highlight on this form at the bottom, we actually ask here, and it's the best place for it, but it doesn't really necessarily relate to a lot of it. We are looking here for your probable maximum loss, and that's, I believe it's specified in the instructions as, if there was if a 5-ton truck bomb went off at a location, what your, in terms of what your portfolio is, what's your largest probable maximum loss for that, and what the zip code is that it's associated with. That's line 27, and in line 28, we'd like you to put in what that figure actually is. So again, it's an important figure for us to sort of, particularly in terms of comparing it to your reinsurance purchases. So please do your best in terms of letting us know where that figure is. So I think that is all I had in terms of the prepared remarks. Let's see, we do have a question. I see page 1. Do you need us to list the group and the individual companies, or just the group name and number? Sherry, could you go back up to the first page? I mean, what we are looking for there is in like line 4, please put in your group code and your group name there. And then in lines 9 and going down, and add more if you need to, there we want the individual company code and the company name and the type of insurer. And that you can't see it here, but on the live Excel form, there's a drop-down menu there, so you can actually click which category the insurer falls into. So group code and name on line 4, and then individual company codes, names, and types from lines 9 and going down. Do we have any other questions? All right, well, gratified that year over year we actually do seem to get fewer and fewer questions. So I do appreciate everybody's work on this. It's certainly an important task for us every year to do it. It's important for the program to illustrate what it needs to be and what it does. So we do appreciate all your work in getting the data to us. And I think we can sign off now.